Shyam Sekhar joins us, Chief Ideator and Founder with iThought. Shyam, good to have you back and thank you for joining us. Shyam, the relentless bull run continues.
Yeah, basically what we have seen in 2017 is that money has been chasing performance, and it's more in favor of businesses which are cruising along nicely. So what people have been doing is trying to jump onto ships which are cruising along and hope that the ships move faster. But I think 2018 will be very, very different from 2017, I would think, because in 2017 the economy faced a lot of challenges. Two out of three quarters we were growing negative. We just had one quarter of positive performance. So I think that we are at the inflection point where the top-down trade could very well take over.
Shyam, last time when we interacted with you, you said that financials are not overweight but they're obese. But that's where the market action is. And if I look at the GDP print, Shyam, now the economic recovery is round the corner. And the best way to participate in economic recovery is always that you bet on financials.
You are right, but within the financial, there is a wide chasm. If you look at financials, you have financials at 5 times book, and you also have financials at 1 time book. And interestingly, both 5 times book companies and 1 time book company are recapitalizing. Okay, and what divided perception was that there would be a need to recapitalize. So both the companies are recapitalizing now. And post recapitalization, I would think the 1 time book guys would probably be on a better wicket, while the 5 time book guys are really nothing much changes about their business, just their balance sheets look better, and definitely they look richly valued.
Challenge with buying some of these so-called PSU banks is that A, you don't know what the lending culture is. They may look great because the difference between a HDFC bank and a State Bank of India, or for that matter a IndusInd Bank and a Bank of Baroda, is very large. So yes, valuations are on your side. But the problem, Shyam, is that even after bank recapitalization, I don't know what will change there. I mean, will the balance sheet size, will the lending culture change? Will the profile of businesses they've lent to, they will change, or will the babu culture which some of these banks have, will that change?
I think if you remember how the insurance companies work or how the mutual funds work before privatization, I think we are at that kind of a moment as far as public sector banks is concerned. See, once you know that your very survival is at threat, I think that the culture will change much faster than we think. To say that that culture will completely die is a bit of extreme thinking, in my opinion. And you can see that if you're banking with some of the public sector banks, some of them are definitely showing a serious intent to change. For example, if you look at how SBI or Bank of Baroda is moving more towards products and giving people investment options, giving more options to their clients, trying to get more wallet share. I think that a lot is happening, and we seem to be ignoring a lot of what is happening. I think the market, in all its noise, is not paying heed to what's happening in this area.
Right. Shyam, good morning. While a part of the market argues with valuations and some of the traditional, true blue consumer stories, you believe that there is still reason to ride the wave, to stay invested. And I could position that as your contrast team to the naysayers or the non-believers of the consumption stories from a valuation standpoint, primarily because you believe that there's going to be this big shift from the unorganized sector to the organized sector. Give us, one or two names where you see that shift being captured, and the stock price are reflecting that transition.
See, one very evident large liquid stock where I think business will shift from unorganized to organized in the case is ITC. In the case of cigarettes, the smuggled market is definitely going to go down. I think that will be an impact of both GST and demonetization and all your surveillance in payment mechanisms. I would think that cigarette smuggling will definitely come down. And as a result, I think that there should be a perceptible shift over the next 4-5 quarters towards the consumption of domestically manufactured cigarettes. That is one thing. The second thing is, I think even in their FMCG business, I would expect the company to gain more market share at the expense of unorganized smaller players. And I think that you are going to see this consolidation, like it or not. I think big companies are going to benefit big time from both demonetization and GST. So I think one stock that I think clearly which is going to benefit from this is ITC.
Sham,
And
but
it is at a reasonable valuation to its peers.
Sham, as journalists, we love to have this devil's advocate thinking. I am with you when you say ITC has got attractive valuations, but I have a follow-up question, which is that if I look at the FMCG business of ITC, they are not making money. And if I look at companies which have a turnover of that size, whether it's a Marico or a Colgate or companies which have a turnover of $3-4 billion in the FMCG space, they are extremely profitable. So I like the ITC cigarette business, but I don't like the way how they silly and how they have not been careful about their capital allocation.
See, actually, I would think that you cannot look at FMCG as one business because there are several businesses inside that FMCG. Because Marico has got more or less a very well-defined business. Most of the other companies are into one area. This is into everything almost. Like ITC has got probably 20 areas where they're interested. Now, if you look at where they have been 5 years, like biscuits, I think there they have cracked it. So I think that there will be a gradual sequential coming good of businesses. So it's going to be a case of fairly deferred gratification in the case of their consumer business. But I would think that definitely if you look at the others, I think these guys are having it in them to succeed because the market still has that opportunity. There is a place for such a large player.
Shyam, another contra theme is, the steel sector. I don't know how to position it as contra because, the steel stocks have given a splendid return. I mean, you look at their 52-week performance, and we can bring up Tata Steel for our viewers. Of course, that's another thing that it's an integrated player, but even JSW Steel for that matter, I think last 2 years, 3 years performance has been very good. How are you pegging the contra element in this theme? Is it because, many believe that, again, consolidation is going to be the way forward for the sector, so the upside is limited, but you're saying that no, things are still going to roll over, so stay put.
See, there are two aspects to steel. I think today steel looks to be the best way to play the infrastructure theme in India because I think the government is definitely encouraging the infrastructure to use more domestically produced steel. It is making imports definitely difficult, and there is a measured shift towards increasing the domestic share of total consumption. Now, there is another aspect that makes steel very interesting. Yes, the prices are near their highs. We are at the cusp of probably the biggest consolidation of the steel sector in India, something that has never been seen before. We will see this consolidation play out over the next 3 to 4 months. Post consolidation, many of these companies which acquire other companies will probably get recapitalized. I would think that listed players, if a JSW or a Tisco manages to acquire one each of the big companies in play, I would expect that both these companies will need to recapitalize themselves. It will not be a simple case of taking on debt. They will raise some equity also, and at that point I think the market will be willing to give them equity in the form of either rights or placement or whatever form their board decides. So I think at that point of recapitalization, I think the stocks will tend to bottom out, and from there we could see a significant growth in their valuations over the next 3 years, because from there business runway is very clear. I think their growth will be very clear.
Where is it that you find the scope for outperformance within the steel pack?
See, you have to buy the companies which are having capacity in excess of 15 million. I think below 15 million, I think you should not look at steel players. You should look at large players which are having the kind of scale. So I think you are going to see the 15 million plus guys become 25 million, 35 million in 1 or 2. You would see that. There is a potential for that to happen. In that case, you're going to really have very large players taking wings in the Indian steel sector. And I think that is something to be watched very closely.
Comes to mind there is Tata Steel then.
It's very much right on top. Very much right on top.
He's not.
Tata Steel also has a problem called chorus.
Yeah.
So is one better of buying a JSW Steel?
See, I would think that I would wait for the NCLT resolution of these three big bad companies. Once those three get settled, I think we should know which one Tata Steel is taking or not, or whether they are going to be passed over or pass over the opportunity that the consolidation offers. Only post consolidation, I think we can make that pick between these two companies. I think we sadly we cannot rush into that call between these two companies at this point in time.
Okay, fair point. Shyam, is it a good idea to, let's say, start creating short positions in NBFCs because interest rates are unlikely to go down, cost of borrowing will go higher, and some of these companies, Shyam, what my personal observation is that right now they are they are really borrowing long and they're lending short, and that's always very, very dangerous.
Because it's very simple. The answer to your question is very simple. Our stock exchanges have failed to create liquidity in shorts for short sellers over a 2 year or a 3 year window. In fact, you are living month to month. The system is designed to trap short sellers, and when you have the large institutional guys on the other side, I would not venture to go short on individual companies. I think that particularly NBFCs, because the mutual fund guys can stay more solvent with money of retail public than a short seller. So it's only a question of who has the power over 1 month, and I think the short seller can easily find himself at the receiving end. That's the problem. But if you are going to allow somebody to go short over a 1 or a 3 year time frame, it is definitely a no-brainer. But our system is so designed and maintained that it does not allow that to happen.
Shyam, while you've spoken about, and very rightly so, that this is the bank recap plan is an opportunity for PSU banks to get their act together and show the intent of change, and the ones which will outperform will be the ones having that intent of change. But the main view with PSU banks is keep it again with the majors. So you have the names constantly repeated again and again as SBI, BOB, sometimes extended out to Punjab National Bank. But where is it? What about opportunity in some of the beleaguered names? What about a potential turnaround in some of these mid-tier banking names? And which ones would you like?
See, it is at this point it's difficult to quantify which bank will really move faster out of its problems among the smaller bank. The reason is that you have another change in the IBC, which is most recent, which says that if you are an NPA, you cannot take back your company, which means a lot of people who have willfully tried to not repay their loans would change their behavior very sharply. So we don't know how much of exposure each of these small banks has to such people, and how much of their bad loan book is actually comprising people who are not in a position to pay at all. So I think that holds the key to which of these smaller banks will bounce back faster. So I would think that playing a basket, maybe a ETF of PSBs, that would be the best available option before us, so that you would have a play in the larger ones and also you have some exposure to the smaller ones. That is the way to play the PSB space today.